Hi there, traders. This is Brad Gilbert with the FX Market Insight for the 16th of January. All right, now we've come out of the finally come out of the first Brexit vote, UK Parliament. Massive defeat of the plan. Now, just on the frame of it, just look at the major currency pairs here. Aussie and Kiwi just trading sideways. No major drive there, and even dollar yen. Okay, the safe haven trade. Well, no one seems to be too concerned about this. Now, Euro did break down with some weaker growth numbers, but it's been a little bit choppy, caught up in the Euro-Sterling play with Sterling. Now, ahead of the UK Parliament vote, Sterling had dropped from sort of pretty much 129 down to 126 sort of 70, okay? And then after the vote, I mean, it was already up around sort of 127.20, I think. After the vote came out, massive defeat, it rallied straight back up to 128 sort of 80. Now, it's one of those things. There used to be an old saying in the market, buy the rumour, sell the fact, which is basically you get into the rumour on the actual, on the rumour. So this situation would be sell Sterling on the fact that the Brexit vote is expected to be turned down. Then once it happens, it rallies. But no one was expecting, the 150-point rally after the actual deal. Dollar CAD, okay, trading sideways. It's lost all sort of downside momentum. Oil back at 51.82. So if anything, dollar CAD looks like it's ready for a bit of a move back to the top side. But all the news is, as you'd expect, I mean, such a major event is all around the UK Brexit vote. So the news, as you would expect if you're going through the news, what's going on? And this is where the analysts, probably actually, this is where they get paid. So you're trying to work out what's going on. Now, the general feel, what I can see is the rally was, this is the worst possible scenario for the UK. The only thing is, if they stay on course and there's no deal at the end, well, that's probably a worse scenario potentially. But what outside of that, a lot of these news services and a lot of opinions out there is saying, well, that's the worst of it. It's already been factored in. So anything better from this point on, which can only get better, is going to be positive for Sterling. And that's why Sterling's come back quite strong. There's also talk of, potentially rolling back the whole, having another referendum to whether they do Brexit or not. There's a whole heap of things. A lot of the conservative sort of punters are out there sort of saying, well, it's all over, as in the deal is finished. Let's go back to the way we were. And then, what we should see is a correction of that massive, 30-cent move on that whole initial referendum. So we're a long way from being out of the woods with regards to Brexit, but, I think this is quite productive. We now know where the market sits, and the way Sterling is sitting at the moment, it's, we know what's going on in Sterling. It's a little bit all over the shop, but market is sitting mega short, and we may see a squeeze to the top side. So that's where we are with the news. There's no other sort of relevant news going out there. Like, funnily enough, the US government shutdown is such a major event, but you can hardly find anything on it. Okay, that's why the markets just put aside whatever's sort of relevant and just go with what the major news is. Now, if we just come back and have a look at some of the other sort of markets that we're sort of looking for, look at the US dollar index, the impact on it. Now, this is one of the hard things, and trading is a little bit difficult at the moment because the dollar index is just trading sideways. Okay, it's slowly climbed through 95.60, if anything, in a sideways fashion. And even dollar China, dollar yuan, the offshore yuan, it started to steady as well. Now, this would have been big news, this going back, number of months. But now there's hardly any news about China at this stage, although you would expect the stimulus measures to kick in pretty quickly. So what we've got is a bit of a situation where we're just cruising through trend lines. And the dollar index there, you take out that short-term resistance line, you can see it's just trading sideways. We do have a target on the top side there at 96.40. Now, when you come back to your other charts, man, you just need, and this is one of those painstaking things. See how the Kiwi here is just trading sideways. So all you're doing is adjusting the trend line. That ends up being really weak. It's a really weak trend line. And that's why I haven't sort of drawn one on the Aussie, because there's nothing really there. And it's getting to the point where, well, I don't want to do that. So that chart, let me just get that back up. It's coming back to the point where I'm starting to, I don't want to be sort of misled with the support line that isn't really that strong. Now, dollar yen, I've sort of tweaked this. I've been speaking to a few guys at a few banks. A lot of guys that, because the charts are so screwed up, let me just get back to my pen, not the other thing. Because the charts are so screwed up, this move is sort of made charting very, very difficult. A lot of guys are starting to go from these points here and looking for, something to work with. Now, to me, that's a level of frustration even in amongst the bankers, that they are sort of looking for another angle. But you know what? It coalesces with the cloud, but to me, it's just wait for the next thing. But I'll leave that trend line there for the moment. If you're looking at Euro, now Euro had a nice little breakdown. It has bounced off that low of 113.80. So to me, I can sort of redraw that sort of support line. But if anything, overall on the Euro, it's starting to cruise lower. The numbers global, European growth numbers are weak. German numbers have been weak. This thing's going down. Once this Brexit issue is taken care of, I think we'll see the Euro a lot lower. And everyone's talking about a weaker US dollar. I don't see it, because you know what? These other markets, these other economies are much weaker than the US economy. So it doesn't make sense that the dollar falls. Now, I'll just cover dollar CAD briefly. Dollar CAD, you can see this resistance line. It has sort of held the currencies in there for the moment. If anything, I'm just tweaking that line just for the current market. But once again, the full momentum of dollar CAD and that move down with that strong move in oil, rally in oil, has now completely diffused. Looks like it's found fair value, and if anything, it'd be a good time to get some Canadian fundamentals. Funnily enough, on Friday we have the CPI numbers. They come out weak. We could see a nice move back to the top side, and I think I'll be focusing on that later in the week. But that's where we got dollar CAD. Now you come back into the main game, which is sterling. It's hard to remember when the charts have had a couple of major moves like we had at the start of the year, and now you've got this sort of dive on the second. Now we've got the Brexit vote. If you go back over the last 12 months of the sterling charts, there's massive moves like this, but that's all we've got to work with. So that support line sort of sits there at the moment. And if you're looking for resistance, and this is what you should be doing, because to me, traders are now starting to focus on the top side and potential opportunities for a softer Brexit, maybe a turnaround in the referendum, get out of the whole Brexit thing and stay in the EU. So 129.22 short term to me is the really nice sort of level. Above that, you've got some longer term levels, but they're up around 136. So it's a bit of a stretch to. That's on the weeklies. I guess you could. I'm just trying to work out whether you can draw this. Like some of these trend lines are just too aggressive. Like it would make sense to go from the high here across to the top. That looks like a much better level to me. So if I bring that back into the hourly time frame, so what I'm trying to do is just isolate the levels where I can potentially get into this. You got a couple of highs here just above 129, and that resistance line coming in off that other daily high around 129.20. So that's, to me, is a good level. So we've got some levels here. The one on the downside is very weak, but we'll see how that plays out as well. All right, so what does that do for us? Well, on the whole big scheme of things, if I get up the MyFX Trading Hub, now the markets are back at full liquidity, so trading conditions are quite good. It's just that we don't have any direction on the major currency pairs. If you're looking just down the bottom here, this is where it gets tricky, right? So you got major pair outlook. To me, everything is on the sidelines and all the focus is on sterling. Brexit, geopolitical event, could go anywhere. But the charts are telling me it's going up, right? Now, of course, the whole Brexit and geopolitical issue could turn around in a split second. But to me, overall, it's very hard to be sitting short when sterling is starting to rally. Now, tomorrow we've got Carney speaking. We've also got UK CPI numbers. And when you look at the whole big spectrum of what's coming around, to me, and I'll come back into, I just want to give you a look at where we get this overall outlook. If I just come into sterling, the whole fundamental aspect of sterling is very strong. The economy is actually going well without too much else going on. So medium term on the dailies and long term, this thing's starting to look like it's going higher. Short term, it's a bit of a dog's breakfast. But overall, it is still climbing higher. And when you look at the overall, as I said, the fundamental picture, the numbers are improving. Okay, unemployment steady, average earnings stronger, retail sales stronger. Now, the Bank of England is pretty much neutral because of Brexit, but inflation is still above their 2% target. So to me, you know, if they get Brexit sorted, I can see sterling rallying quite aggressively. Now, obviously, getting long and staying long with Brexit still in the game is a tough one. But just I would start to sort of factor that into your thinking. Now, just having a quick look across the currencies and give you a look at the detailed analysis. And this is why, on the US dollar, we've got a bit of a mixed picture here. Short term up, medium term still it broke down. It's still sitting in that pattern. So overall, the US dollar to me is just trading sideways. You come in $1 yen, you take out that massive glitch. It's just all sideways there. Bank of Canada, it's just hanging in there on the daily charts, but on long-term and short-term charts, it's just grinding sideways now, lacking all momentum. Dollar Swiss has turned around on the short terms, but still, medium and long-term charts, it's not doing anything. ECB, well, the euro, I should say, short-term, yeah, sure, it's drifting lower, but medium-term and long-term, it's still sitting within current ranges. We've already gone through sterling. The Aussie, pretty much the same picture as the other majors. Long-term, Aussie's drifting lower, but short and medium-term, it's just grinding sideways and sideways for the Kiwi. And that pretty much leaves you where it gives you the picture of what's going on. Traders everywhere, I'm talking mainly the banks, the guys that I speak to, are gagging for something to move, something tangible they can get involved in. Sterling's been too aggressive, but it looks like a lot of traders did get involved and got quite hurt. So just be patient and wait. This period will be over very shortly. You get past, now we've had Brexit, you should expect sterling to calm down. Then we've got these UK releases tomorrow. Carney is probably the most important. Then later in the week, you're going to start to get into just normal trading conditions. We're going to get some US data. We've got some Canadian data there as well. Obviously, you've got the Philly Fed manufacturing there as well. There is that G20, which is hanging around, but you know, there's not much we can do about it at this stage. So that's where we are, guys. I think, you know, once you fully factor in, you know, the vote and everything else, it's a good time if you've got access to something like Metastock or Bloomberg. Have a look what the various articles are. You want to get a number of different opinions and really sort of work out what's going on with sterling. Now, obviously, a no Brexit deal would be negative, but you know, what we're trying to work out at this stage is what is factored into sterling and what isn't. To me, all the negativity is factored in, and that's why many traders are starting to look for the top side as a potential move, and you know, things can only get better. All right, guys, that's it from me. As I said, the Asian session should be pretty quiet. We're back into the European session with Carney and some UK data. The North American session, there's still not much on the airwaves. You'd expect Trump to chime in with some sort of crazy comments about this China-US trade issue. Of course, his time is all caught up at the moment with the government shutdown, which is just a joke. Anywhere else in the world, it'll be sort of quite catastrophic, but doesn't seem to be affecting too many things in the States. So we're just sitting on the sidelines and waiting for some dominant direction as we go forward. All right, guys, that's it from me. Plenty in that. If you have any questions, I'll see you in the 247 trade zone. Cheerio.